A massive financial surprise today. Japanese tire giant Bridgestone has slashed its bond offering by more than 50%. What's behind this decision? And what does it signal about investor sentiment? Let's get into it. According to sources cited by Reuters, Bridgestone has drastically reduced the size of its planned bond issuance from over $700 million to $350 million. That's a big drop. The company initially planned to issue $3-denominated bonds, $300 million, $300 million, and $100 million. But now it's just issuing one bond worth $350 million. Why the sudden change? Well, analysts believe it may reflect weak investor demand. Could be that market volatility or rising global interest rates are making investors a bit leery. You see, when interest rates rise, the value of existing bonds falls. So investors may be less willing to buy bonds, especially if they're not super bullish on the issuer's creditworthiness. Or maybe Bridgestone just isn't offering a high enough yield to compensate for the risk. Now, you might be wondering, what are bonds and why do companies issue them? Well, bonds are basically debt instruments. When you buy a bond, you're lending money to the issuer in exchange for regular interest payments. For companies, it's a way to raise capital without giving up equity like they would with an IPO. Large firms like Bridgestone use bonds to finance operations and expansion. But remember, bonds are not risk-free. If the company defaults, bondholders could lose money. So investors will demand a higher yield or interest rate to compensate for that risk. In fact, there's a whole market for corporate bonds. Investors can buy and sell them. And the prices fluctuate based on factors like the company's financial health and overall market conditions. So what's going on with Bridgestone? The company is a global leader in tires, but it faces challenges like high raw material costs and increasing environmental regulatory pressures. Despite this, Bridgestone remains financially stable. Its revenue has grown steadily over the past 3 years, although profits have been fluctuating. The company's net income attributable to owners was 87 billion yen in 2022, up from 64 billion yen in 2021. This is a 36% increase. Still, the reduced bond offering may signal that Bridgestone is being a bit more cautious about its finances. According to rating agency Moody's, Bridgestone has a strong liquidity position with around 38 billion yen in cash and cash equivalents as of March. So the company isn't facing a liquidity crisis. However, the challenging operating environment may be leading to a more conservative approach. This move could have ripple effects throughout the auto industry and other Asian bond markets. Many large companies in Asia have been issuing bonds to raise funds. Last year, Chinese companies issued a record amount of offshore bonds, while Korean firms have also been active in the market. However, growing investor caution in 2025 may lead to a pullback. Even giants like Bridgestone are adjusting their sails to the changing winds. We'll be watching closely to see how markets respond. If you found this breakdown helpful, don't forget to like, comment, and subscribe to Mundo News for more in-depth global finance updates. Thanks for tuning in. We'll see you back here tomorrow.